In this video, traders, we're going to look at how to incorporate intuition into your trading rules. Hey traders and investors, a very warm welcome to you. So intuition is a big thing, but it's very difficult to quantify. And let me just say, if you're a brand new trader, the intuition isn't there yet. The intuition comes from spending the time in front of the screen. And it might seem like, well, I've got a good idea of where the market's going to go and this and that and the other. You know, intuition, by the definition of it, is your subconscious giving you kind of internal clues based on what it's experienced before. That's how we get intuitive. You know, we don't really get intuition from a kind of event that we've never seen before, because that's not what intuition is all about. So we could need to harness it somehow as a trader. It would be foolish not to, right? As you become more experienced, you know, and listen, you don't have to be mega experienced here. You could be experienced enough that you've traded through multiple amounts of days and multiple amounts of markets to start developing intuition. The point is, this strategy here will help you develop it and help you learn to trust it, and also help you quantify it to see if it's any use for you. Because ultimately, guys, if your intuition is not working for you, then don't use it. It doesn't mean you can't be a profitable trader. It doesn't mean you can't trade and it work well for you, but you just have to know that, hey, my gut doesn't really give me the right insight that I need, so I'll avoid listening to it, or vice versa, hopefully. So let's have a look. So we've got a setup, and I've kind of summarized things very, very broadly here. So our average setup would contain stuff like, hey, the chart pattern, the position of price, i.e., you know, where are we in the longer term time frame? Are we at high end of a trend? Are we in the middle of a range? Are we kind of at the lows, 52-week highs, whatever it may be? Are we intraday, a gap fill? You get the idea. 3, the driver. We're looking at what's the driver of price at the moment. If I'm swing trading, hey, I think we've had good earnings out on a stock. That's causing the stock to kind of move. That's my driver and engine. People in the market are worried about a trade war. They're worried about Brexit. They're worried about this. They're worried about that. Whatever it may be, that's the driver at the moment. Fine, I know what that is. I'm happy with that. Let's go. Number 4, what's the risk on the trade? The usual thing with that one. 5, where's my targets for the trade? So your normal trade setup rules. 6, I'm looking at my price action. I want to see, you know, what price has done, its behavior, how aggressive it's been, how it's responded to different events, that kind of stuff. So it's going to be different for you, of course, but that would be maybe something you look at for your setup. But now is where you add intuition into it. So number 7, you go intuition, and you grade your intuition on the setup working from 1 to 5. So you say, you know what? This is my setup, these are my rules, it's ticked all my boxes I need. How do I feel about the trade? And 5 being, hey, it's the best thing since sliced bread. 1 being, not so keen on it. So you go, I'm gonna grade it a 4. And one thing actually, which I took from, I can't remember the name of the book, was if you're using a 1 to 5 scale, you're banned from using 3. Because 3 is a cop-out rating, right? It's like right in the middle. You're not saying I feel good about it, not saying I feel bad about it, you're not committing. So maybe you can try that. If you find yourself grading things 3 all the time, maybe say 1 to 2 or 4 to 5. Ignore that 3. So you've got to actually make a commitment. But anyway, I'm digressing slightly. So let's say you're graded to 4. And in 4 meaning, I think it's really, really good. I like it. It's a good trade. It's going to work out. Or you've made it a 5, which would be, this is an amazing trade. I love this. I definitely want to take it. I'm not going to miss out on this. This is one of the better trades of the past week, whatever it may be. Going down to 1 being, you know, I'm really not feeling this, but you know what? It's ticking all the boxes, but I just don't think it's nice. And then number 2, you get the idea. So now you start to have this number by the trade that you're taking. So when you come to review, you see where I'm going with this, guys, you see how your intuition has guided you or not. You look back on your trades, and let's say you've got 100 trades there, 50 trades, whatever it is, your swing trading is going to be less. And you say, hey, look, the trades that worked the best for me, I actually had a grade 5 intuition on, or a grade 4 intuition on. The trades that didn't work well for me, I graded 1 and 2. Interesting. Or it could be vice versa. It could be say, hey, you know what? The very best trades came from the ones when I put a 1 on it. So regardless of how it matches out, the thing is, now you've got data. You've got data that you can use. You can use you as an indicator, as a clinical, logical indicator. You don't have to think of intuition as something, hey, this is, you know, I can't measure it. You can, because you have measured it. Your intuition has given you data. And let's say your intuition is good. And let's say when you rank things 4 and 5, most of the time they work out to be very good trades. That means when you go through your process, you go through number 7, you say, what's my intuition saying on this? I think it's a 5. Now you can add another layer. Maybe now you take on more risk. Okay, maybe now you increase the position size. Maybe now you do some other things. Perhaps if you grade it and you're like, I know what's a grade 1, perhaps you don't even trade it. Perhaps you know that actually most of your grade 1s have been poor trades. So you can see how you can start to use this as a genuine indicator, as a genuine tool for trading rather than this kind of fuzzy thing. You might even find actually very often, I find this with traders, is that they'll grade something at 1. Hey, I don't like this at all. This is awful. This is the worst trade ever. I don't want to take it, but it's ticking all the boxes. And the ones are the ones that are the outliers. They're the ones that are flying. They're the ones that are making heaps of money. And so you can still utilize that. You can say, hey, listen, number 7, right, my grade, this is a 1, this is a 1. But I know if I think it's a 1, I need to be increasing my position size on this because those ones that I think are the worst are the ones that do the best. You get the point. Anyway, guys, this is a good way of using intuition. It's a kind of way you can use it and grade your trade before you do it. Then you go back and review how your intuition has fared, and if there's a pattern there, you can utilize it for future performance. If there's not a pattern there, then fine, you just discard it completely and say, you know what, my intuition isn't guiding me one way or the other, there's no use to it whatsoever. At least you now know. And maybe you can then do this experiment again 3 months down the line, 4 months down the line, 6 months down the line, whatever it is, and just see if your intuition now helps you or not. Anyway, that's a simple way of incorporating intuition into your trading rules. Let me know your thoughts in the comment section below. If you like this kind of stuff, give it a thumbs up. That is much appreciated. Of course, if you haven't yet already, hit the subscribe button as well. See you later. Take care. Bye-bye. Keep your risk managed, whatever you do.